Morning, Steve Fried in Chicago with the morning grain comments. Well, it's Thursday, and the big event overnight was the Chinese vote to take over Hong Kong. Estimated that rich Chinese people have half of Hong Kong's private wealth of $1 trillion, and that they may try to move that money out of Hong Kong. We'll also be watching the U.S. reaction to this vote and the implications that it may have on China demand for U.S. products. As far as other news is concerned, we've seen soybean meal futures trading to new lows. The rally in soybeans has got crush margins down and oil share higher. And so we'll be watching to see especially China demand for beans and U.S. domestic demand for soybean meal. Over in the corn and wheat, we do have a ridge developing next week across the southern plains. 6 to 10 day and the 8 to 14 day is warmer than normal and drier than normal. Most crop scouts do not feel that this is going to hurt the hard wheat crop, with central Oklahoma harvesting starting next week, and the Kansas crop seeing 2 weeks of cool, wet weather helping them get through this into final maturity. But the market may put a weather premium in corn and wheat because of this ridge. Our weather guy feels the ridge will retrogress back west after the first week in June, but he does feel as June progresses, the ridge will come back, and that we could down the road see some net drying, let's say in the southern plains, maybe Nebraska, Missouri, and the Delta. Rains will move across the strong jet stream in the northern plains into the eastern corn belt. So with that type of forecast through June and maybe early July, we could see the market put a little premium into corn, and it may impact soybeans down the road, especially if the Delta dries out. Still think it's going to be tough because of the drop in demand to move corn much above the 340 area, and December corn can still trade lower in the fall if we have a big crop. Also in the beans, I think it's up to China. We could trade back below $8 if they don't buy U.S. beans, or we could test $9 if they do. And in the wheat, we could probably pull back below $5 in Chicago wheat, but then maybe rally after harvest. Europe is dry in the west, wet in the east, and the Black Sea weather is improving. So not much upside potential in the wheat market. Maybe July at 5:30 is the best we can do down the road. U.S. farmers are going to have to start moving corn to make space for the 2020 crop. When we look at the 2020 harvest, we look for farmers to store the corn and probably sell the wheat and beans. The basis level in corn has moved higher because of the lack of farmers selling, and a little bit increase in domestic demand on the ethanol side as gas demand starts to slowly improve, but still well below levels before the virus. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.